Hi everyone. So for today's video, I'm going to be covering the differences between positive and negative nodes, what they each mean, and how we approach both of them, both from an options perspective and a futures perspective, although I'll focus mostly on the options side. So so basically the previous video I covered that volume is going to matter in terms of where we expect deflections in turn, a bounce upwards or downwards, however it may be. Now, whenever we're at these large nodes, we're tapping them and we're trying to actually enter a play, what can help us is knowing how price will behave in those areas. And for that, that's where we start looking at whether it's a positive or negative node and how that's going to impact the movement of price as we hit those nodes. So and I'll start sketching this out in theory, and then I'll try to give a few examples. So obviously for a negative node, which any strong negative node is going to show in purple. And then any strong positive node is going to show yellow. Now, I will say they can show in other colors. So if you'll notice right now, we have, for example, the 650 node shows more green, but 50,000, this is still a sizable node if you go by the logic that I explained in the previous video. So sometimes positive nodes are going to show more greenish, and sometimes negative nodes are going to show more bluish, but they're still going to matter. So for that, to establish which positive or negative node is actually going to matter, that's where you're going to want to look at the volume. But assuming that you're looking at a node that is strong, how can we expect price to react in those levels, right? So the general rule is anytime you have positive, and everything I'm going over here is for GEX, for gamma. So anytime you have positive gamma, as price hits it, it'll tend to slow down and sort of be dampened or pillowed in, right? So if our price is dropping in from above, it'll sort of slow down, come and tap the level, and then give a strong or give a bounce off, right? So actually, let me draw that a bit better. So it tends to be a bit more parabolic in nature. Obviously, I'm doing a line. This is more of a, if you're looking at candles, they just tend to be a bit more choppy, slow down as we hit it, and then get that rejection off. Same thing with the downside, right? You come and tap it. Another key thing here is that a lot of times we'll hit the node, and sometimes we will overshoot slightly, but we tend to not overshoot these nodes very much, right? So that's another key feature here, which I'll explain a bit more of how that impacts our entry later. So for the negative side, a lot of times price will come down, and what'll happen is it'll spike through and then bounce, so to give us a more sharp reaction. And so the main difference here is a lot of times we can expect this overshoot to occur. It won't actually happen every single time, but the overall reaction will be a lot more violent, right? And same thing for the downside is, we can get a lot of these times very big overshoots before we get that big rejection. So the thesis doesn't change based on whether it's positive or negative, and that's why I always state that the volume goes first. But how you execute on that thesis varies is completely different because if you're expecting an overshoot, there's no sense in getting filled at the level itself. You might as well try to get filled on the overshoot on the top side or downside, depending on which direction it's coming from. So when we have negative nodes, by anticipating that overshoot, we can limit buy-in a lot cheaper. So, if let's say contract price at the midpoint is around 150 on both of these cases, right? On a positive note, you're trying to limit buy-in a lot more conservatively. Maybe you're limit buying in at 140. You're just saving yourself a little bit of cash there. Whereas on a negative note, if we know at the level it's around 150, we know with the big overshoot, we can probably get in a lot cheaper around 120, 130, and you can get a steeper low ball and still get filled, right? Or you can, wait for price to hunt a little bit deeper and then try to get that fill there, right? So that's on the option side, sort of how I set my limits as I go in. Now, from the futures side, it's a little bit different. Because the problem with futures, right, is if you get a very steep wick through a level before we bounce, that can stop you out very quickly, right? Especially if you're sizing correctly. So there's two ways around this. One, you can size pretty small and leave a very wide stop. So you're trying to mimic sizing for zero on options at that point. Or you can allow price to wick under. And while price wicks under, you can essentially set a stop order, right? So if price wicks above, you set a stop sell, you'll get filled on the way down, right? And then the inverse is you'll set a stop buy, you'll get filled on the way up. So for any of you that do futures, like get comfortable with any kind of stop orders. I would use stop limits as well. Sometimes stop markets, you'll get filled pretty poorly. But if you use a stop limit, that allows you to get filled after the wick is created, right? And that's the logic is you get filled after the wick is created and you don't have to deal with that large amount of drawdown because obviously futures, it's you're not able to size completely for zero. So you do have to treat it a bit differently on that side, but still you can use the knowledge of, okay, this is going to be a negative node. I can anticipate a steeper overshoot and then I'm going to use a stop buy. Once we overshoot, I'll set that stop order and that should give me a much more favorable result. Now, one other quick thing I'll mention is this more volatile reaction that we expect on negative nodes is also, obviously I've been speaking for everything in terms of if we do reverse, there are going to be cases where price does not reverse at the level that you believe, right? Where price goes against you. In those cases, the negative nodes can be a little bit more dangerous because what will happen is we are still getting a more violent reaction, but if price comes down and doesn't hold this positive level, a positive node will sort of chop through and sort of slowly grind through it. Whereas a negative node, if we come down and lose a level, we'll just sort of slice through it and accelerate through that area, right? So negative nodes at times can actually be accelerants if the level fails, right? So if the level breaks through, a lot of times this negative volume can actually like push the sort of accelerate the move, right? So whether we bounce or whether we flush through, negative volume will give a very violent reaction. Actually, I didn't draw the overshoot here. So like this, it'll give a more violent reaction. So that's something that's important to note. And then this also matters a lot when we're in either positive or negative regimes, which I'll cover in a separate video. But when we have very large stacks of either positive or negative, um, a lot of the times that can lead to, if it is a very positive, heavy day, it can lead to a lot of chop, right? Whereas if it's a very negative day, then we know we can have a lot of very rapid price action where it's bouncing around quite rapidly. The last thing I'll mention for this video is that if you're doing indexes, right? So if you're trading off of the Trinity mode, and if you're playing off of a node that on SPX is positive and on QQQ is negative, we can have sort of these mixed sentiments where it's okay, we're expecting a more dampened reaction from one index, but the other index is showing that we're going to have a more explosive reaction. In those cases, I'll usually err on the side of caution and I'll just default to the violent reaction, right? Because if you start entering trades based on a positive node, but we have a negative node on the other, on one of the other two indexes, and we end up overshooting, you can end up getting an entry a bit too early on. So a lot of times if I'm trying to decide between the two, I'll just default to whatever's the safer one. So defaulting to a negative node entry where I'm gonna try to get filled on the wick. That'll give me a much cleaner or much cheaper entry overall. So I'll go over those like some more specific examples of that in later videos. But for now, this should give a good grasp of, okay, how do we treat positive nodes, negative nodes, and then based on how we expect price to react in those zones, how do we actually trade on that? So yeah, hopefully this was helpful. And then the next video, I'll probably be covering rug pulls. Okay, thank you.